Hey, what's going on, everybody? It is James here with Crypto Common Sense, and I've got a market of Bitcoin, a stock market, whatever you want to call it. I've got a market update for you for Wednesday, September the 9th. It's right at 9 o'clock Central Time, and it never fails. I start shooting these videos, and I start getting bombarded with Skypes and things. So I just started shooting this video over again, so there's not a bunch of beeps and stuff. And I did mute the computer for those of you that complain about the alerts. I know it's frustrating, but please remember that what I do for a living is trade. These videos are what I do for a hobby, so got to keep the alerts on. So if you hear them going off on my phone, sorry, right? That's got to have those. But what I wanted to do was I shot a video yesterday for everybody, talking about the market and things. And then about 3 o'clock this morning, right before I went to bed, I actually shot another video for the Patreon and the Discord members, and kind of sharing some additional thoughts and sharing why I was, bullish on Bitcoin short term, right? Felt pretty good about Bitcoin moving up today, and of course it did, which was really nice to see. But what I wanted to do was I wanted to kind of share that with you all now. I know it's too late to really act on it, but that's not what the videos are for anyway. They're not for acting on. It's just kind of stuff that you can take, you can put it in your toolbox. And then in the future, it may be something that pops in your mind that gives you some ideas that might, work out to your benefit, right? And again, if you're not in the Patreon already, you can check the description. There's the link down there. You can join. It's just $7 a month, right? Just literally a couple of dollars, and that helps to keep the videos flowing. And also, let's be honest, it gives you access to some cool content, right? By the way, before I jump too far into this, make sure and do me a favor, hit that thumbs up button if you haven't already. Subscribe to the channel if you haven't already. About 72% of people who view the videos are subscribed, which is extremely high. So I genuinely want to say thank you. I really appreciate that. I think that helps a lot with YouTube's algorithm. And, for those of you that watch but don't leave comments, do me one small favor, please. Start leaving some comments. Most of the comments I get are stupid bots, spamming links and spamming Telegram numbers and all that crap. So more comments would be great. But the main thing I want to focus on in this video, because this is just a little mini update, the main thing I want to focus on, right? Tweezer bottoms, right? Tweezer tops is another thing, but we're going to talk about tweezer bottoms in this video. Tweezer bottoms are a really, really good reversal signal. And, I don't know what Google says about these, or if you Google these and start reading a bunch of different websites, I don't know what they're going to say about them. Because quite frankly, I didn't learn to trade by reading websites or watching other people's videos. Basically, everything that I do, for the most part, there's a few exceptions, but for the most part, everything that I trade is stuff that I learned through trial and error, right? At this point, I've been doing this over 3.5 years, and I've spent probably 12 to 15,000 hours charting, right? I mean, literally, I'm not exaggerating. I literally mean that. You can break it down, 8 to 12 hours a day for 3.5 years. I mean, that's basically, right, been the gig. I mean, I don't sit here and stare at charts every day anymore, so it's probably closer to 3 years, because the last 6 months I've been getting better and better about setting alerts and not staring at charts. But thousands of hours of looking at charts and trial and error is kind of how I came to where I'm at. And then after I started figuring stuff out, I would go out sometimes and happen to Google something and be like, oh, that's what that's called, right? So I was trading these things, I just called them like double tails, basically, is what I always referred them to as myself. And then one day I was reading on Google and it called them tweezer bottoms. So basically, tweezer bottoms, in my mind, what I'm looking for is I'm looking for two long tails that have almost exactly the same low, right? And ideally what I want to see is I want to see the first one and the second one be different colors. And what I mean by that is if you've got a big red candle coming down, ideally I'd like to see the second one be green. Doesn't have to be, but I'm going to feel a lot better if it is, and vice versa. If you've got a big green candle going up and I'm looking for a reversal, I'd like the second one to be red. So this wasn't perfect. I also didn't love the fact that this first one was so huge, right? But what I did like about this is the fact that, yes, there was these really long tails. Yes, they were side by side. So again, that's what I would call tweezer bottoms. And what you have is when you do have a big old candle like this, it creates a liquidity gap, which you guys know by now. I love gaps, right? I'm always talking about, the gap needs to fill, the gap needs to fill. So there is a gap here, and it really goes all the way up to this level way up here, right? So I just feel like there needs to be, doesn't need to be, but I feel like there should be a retest of that level. The 50-day moving average is up at that level. The 61.8, if we measure the Fibonacci levels from here to here, it's going to be up around that level you can see there, so on and so forth, right? So when I saw these tweezer bottoms, to me, it said we're not going to go lower first. We might go lower, and I think we will go lower, but I think what happens first is we get a bounce and we get a bear squeeze, right? Where the thing pumps up and squeezes those early bears. Those bears who are saying, yeah, it's going to go down to 9,600 and fill in that CME gap. I'm not making fun of them, by the way. If that comes off that way, it's not how I intend it. That's what a lot of the market felt like. You know, the market, the whales, the manipulators, the market makers, whoever you want to talk about, they set that up perfectly to look like it was going to go in and fill in that gap. But if you go back historically on Bitcoin, and you can look at the different time frames, and you'll see this again and again and again. But the 3 days especially strong, you'll see these tweezer bottoms really, really play out nicely. Here's a perfect example back in February, right? We topped out up around 10K or so, 10.5K, started to come down, right? Put in these tweezer bottoms, and then poof, the bounce. And then more downside. This is exactly what I'm looking for. I'm looking for that dead cat bounce, and then I'm looking for the dump. Same deal, right? Now the candles don't look exactly the same. Like I said, this one, the second one was green, which is ideally what I like to see. This one, they're both red, but they're both occurring right after a huge dump, right? So you almost always, not always, but almost always get some type of pushback when the market moves too far, too fast in one direction, and that's what it did. So that's the reason that I was bullish. Okay, I'm going to take this setup off there because we're not going to talk about that. But that's it. It was really that simple, right? And you can go back in time and you can find these tweezer bottoms, and you'll see they play out again and again and again. Here's another really good example of this, right? So right here you have boom, boom, and then the market did what? It moved up. Was it huge? Was it 10%, 20%, 30%? No, because it was just a bounce, right? It wasn't a trend continuation. And in this case, it moved up about 4% before going lower. But who's going to complain about making 4%, right? I'm not. I don't think most people would, right? You can go back here. Here's another really good example of this. This was back in May of 2019. Price came way up. Looked like it was going to, come crashing down hard. It had ran up from 3,500 to over $9,000. And it came boom, slamming down 18%. But then what happened? Boom, right? You got those back-to-back tails, tweezer bottoms, whatever you want to call them, right? This candle closed here. And so a person could have potentially, I'm not going to talk about setups because there's more to setups than this, but a person could have potentially been looking for a play, maybe had a stop loss down around that tail for around $500 per Bitcoin. And of course, would have been very fortunate to be able to ride that up for nearly $6,000 per Bitcoin based off of that tweezer bottom. And again, if you're talking about trade setups, not a great idea to enter a trade based on just one thing. But for example, if you had, those tweezer setups and you had some trend lines that you're watching, or you had some type of specific, MACD signal that you were looking for, or RSI or momentum or whatever it is you trade, if you could start mixing and matching all those different things, then you might have had a reason to take that trade. So for example, and I haven't looked at this before the video, but let's just check. Let's say that you were watching the fibs there. I don't know. Fibs don't really say much on that one, but I don't know. Maybe you have some kind of setup in your mind that works where you like to long the 23.6. Not saying you do. I don't. But let's just say hypothetically you did. Well, now you've tested that. Plus you got the tweezer bottom, yada yada, right? But yeah, that's the main reason that I was, I guess what you would call micro bullish, right? And the other reason is because of where those bottoms happen at. If you look, they both ping this green line. What was that green line? That green line was the old resistance back here, right? It was resistance here, had a false break, resistance through here, resistance here. And what happens when you break above resistance? Well, the first thing you're looking for is for resistance to flip to support. And that's what it did, okay? Now the catch is, right now, I'm still waiting for this move toward 11K, hoping we get it so that I can look for some positions up around that area, right? But got to be careful getting too bullish because it's still got a really important level right here, right, which is right around 10,371. and it seems to be kind of struggling with that right now. So will we get up to my 11K target? Maybe, maybe not, right? That will be a video for another time. But yeah, I wanted to shoot this and just kind of give you guys a more in-depth explanation of what's going on. Also, the other thing is, I know I've talked about this in past videos. Not this is something totally different. But I know I have talked about the 19-week moving average in past videos. It is definitely something you want to keep an eye on. Somebody sent me a message today asking about the 21-week. It's just a different moving average. They're very, very close. I don't use the 21. I have seen other people use it. I've seen it on Twitter over the last couple of years as well. But the 19-week moving average, when you back test it, it tends to be a little bit more accurate. I think when the people do the 21, I think they're actually doing the EMA, whereas when I use the 19, I'm using the regular simple moving average. But this has been historically a really good place, and I'm not telling you to long it. Don't misunderstand what I'm about to say. It has historically been a really good place to take longs. You can see here it just rides that, and that goes all the way back historically. That really started becoming support back in January of 2016, and then when you break below it, it becomes resistance through here, right? But it's been very muddled the last year. A lot of breaks above, breaks below, right? Just kind of moving around it. So I'm not sure how relevant it is right now, but you know, again, that was one of the other reasons that I kind of leaned toward a bounce, was because we were coming down and testing that support. But you know, please don't make any mistake about it. Like I said, I'm not expecting some type of new, bull market where we just continue going up from here. I'm not saying that's impossible. It's certainly possible. But me personally, all I'm looking for is a bounce up to this level, right? Up around 11K to 11.2. And then what I'm looking for is something like this, and then something down toward this range in here, okay? I could go on for hours about this stuff, but I promised a friend I'd jump on a call with him and teach him about trading. He's never traded before, so looking forward to that. So I'm going to do that instead. But hopefully you guys enjoyed this. Please remember, I am just some guy sitting in a spare bedroom. Nothing in the video is trade advice. Nothing in the video is financial advice. You should always do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, or precious metals. This is James with Crypto Common Sense, and if you haven't already, please do me a huge favor. Hit the thumbs up button, check the description for a link for Patreon, and don't forget to leave a comment. All right? Trade safe.